Hi, this is G-Man Trading Community, and today, my friend, you are an investor. You know how to invest. I've taught you. Now, today, I want us to go to another controversial lesson about something called CFD, Contract for Difference. This system was introduced because in the spot market, which we were talking about, in spot market, you need a lot of money. Secondly, there's a very big process because engaging in those assets, you need different brokers and different regulations and jurisdictions to access those markets. For example, when you are buying share, you need a CDS account, which it is issued by the government. You must comply with taxes. When it comes to cryptocurrency, it's another process. When buying those crypto, you can lose them because if you don't know the system on how to buy them, it's very difficult. So across all those assets, when it comes to forex, you need bank. It's a very hectic process. But all that, now people sat down and came up with an idea of how they can interact with all those assets with another model of trading, which is called CFD, Contract for Difference. The main aim was that the real-time market of each and every asset, it won't be tampered. It will be the same as the spot market, but the CFD market will be like a shadow of the spot market. So one way to interact with it, people had to come with something called contract. Contract is like an amount that would vary when you are trading in the CFD. Second thing is the distance. This would be very important because when you open a position, when you come again and you close, you need now to measure the distance, whether the market has gone to in your favor or not. So the distance multiplied by the contract you took, and you could be paid the amount of money which could be compatible to the distance the asset moved. So you can try to understand the way I'm trying to explain, but as we go deeper, we will learn a lot of things about CFD. So we have learned that CFD is the shadow of spot investing, and the reason CFD was introduced is because in the CFD you don't need a lot of regulations when you are trading. You just need to look at an asset and predict the direction you want to take, whether you see that the asset would appreciate or depreciate, and then you pick sides. So let's dive in and we'll look further on this. So we learned that CFD trading stands for Contract for Difference. It's a type of financial trading where you speculate on the price movement on an asset without actually owning it. So you have heard CFD trading is contract for difference. Contract is the same as an amount you would like to buy in the market, and then the difference is the distance that the market could go, whether it would appreciate or depreciate. So in this type of financial trading is where you speculate the price movement of an asset without owning it. Without owning, that this is the most important part, without owning, because on the other side of investing we have to own the asset. And when we buy an asset in the investing model, if an asset, the amount of an asset is displayed and the price, for you to lose money on that asset, it has to depreciate to zero. So that's why it is very hard for that model for you to lose money compared to contract for difference, because now here there's a system that was introduced for us to be able either to measure distance, and we'll go further. I don't want to contradict what I have planned for you, my friend. So let's go on. You don't own the underlying asset, whether it is stocks, crypto, or forex, or commodity. So think of it as betting on whether the price will go up or down, and your profit or loss depends on the difference between the entry and the exit price. So that's where now the magic is. So it's like a betting. You bet whether the price might go down or up, depending on how you think. That's what matters. What you think. Then the profit, it will depend on from your entry point to your closing point. The distance between, that's what will determine your profit or loss. So if the price moves in your favor, you make money. If the price moves against you, you lose money. So the formula is profit or loss is equals to closing price you minus by the opening price. So where you opened, you minus the closing, then the distance itself, then when it's multiplied by the contract you took. This might be, maybe if it is forex, you bought one basis currency of maybe $1,000, and then the distance moved maybe 10 cent. You multiply 10 cent by 1,000, and you'd see maybe you have made around maybe $100, I think so, like that. So that's the main that's the formula, but we'll dive deeper, but you can understand now how the logic works. So now you can see the difference in this model. You don't own asset, you make money on their prices difference. So you should know that in this model you don't need a lot of broker, because you don't interact with the real asset directly. Another thing to keep in mind, you don't need a lot of broker. You need just one broker, because you don't interact with the asset directly. So you need just somewhere to find these assets and their real time, and then you could predict where the market could be going, whether it's up and down. And then there's another system for you either to hold your capital, and because when you make money, that's where it will come. When you lose money, that's where it will be taken. So something like that, but we'll go deeper and understand more. So you only need one broker to handle everything, unlike the investing trading, whereby you need a lot of brokers depending with the asset you are interacting with. So when it comes to crypto, like I said, you need a wallet and a broker which engages in crypto activities, because we talked about when buying crypto, you need an escrow system which will help the buyer and the sellers to do their transactions in a safe way, whereby no one will lose money or lose the asset in between. When it comes to shares buying or stocks, you need a CDS account. Now you know those regulations to get those CDS accounts from the government, to comply with taxes and everything. So it's a hectic activity. When it comes to forex, you need those banks. You need to do it maybe even manually. It's a lot of hectic activities, and those assets, they don't appreciate a lot in a single day. But now in the CFD, you learn a lot when it comes to market movement, because those assets, even if they move a little, it will be a lot of money when it is multiplied by the value of that particular asset. So we learn a lot. Let's go on. Now for us to access the market, we need a broker to give us the asset listing, one of the most important, because how can we trade CFD if you don't have the asset listing, whereby you can find those currencies, cryptos, stocks, something like that. Second thing is the real market, the real time price. So the real time price, they will fetch the real time price from the spot investing, and then they list to their websites or their systems. their softwares. Yeah. Second thing is the capital holding. Now you need somewhere to deposit your cash and somewhere you can withdraw your cash. So that will be offered by just that one broker. Second, another thing is holding trading tools for opening and closing positions. So you need a system whereby you can open and close positions. So now the broker will provide that. And you can manage your position, you can close them, you can put stop loss, take profit, like that. So another thing is the analyzing price data, which are in graph or candlesticks, which we will dive after this and every detail of it. So another thing the broker will offer is analyzing data. Now these are like charts. You'll have now to look of about a particular asset, and we see the previous data of that particular asset, and we will be able maybe to predict now more with a skill on that particular asset. So when you think of buying, you have a clear mind of how that asset has been performing in the global market. Now these are my preferred brokers in this sector, and their links are in my YouTube channel links. IC Market and FP Market. These are my preferred broker, and I use them. And the reason will be we will go deeper in them, and you'll know the reason I prefer them. You'll know the reason why I prefer these brokers. So on this, we are going into history. On this CFD, we are going into history of where it started, because it is not a walk in the park. So make sure you repeat to watch until you understand. Make sure you repeat and watch again until you understand when it comes to CFD, because now this is another system of trading which was introduced. Because like we said from the previous lesson about investing is a straightforward system whereby it was done manually long time ago. We still even do it when we are doing other businesses. The same you do other, maybe it's buying and selling of goods, different goods. You buy a shoe, you sell somewhere else. You buy a cloth here, you sell somewhere else with a higher price. That's a dialect. But when it comes to CFD, there's a system that was introduced for interacting with CFD. I mean this system of CFD, contract for difference. Now make sure you repeat again and again until you understand, because there is mathematic formulas, but you will manage, because in this everything consolidates and becomes simple. So in this everything consolidates and becomes simple. So stay tuned and make sure you learn a lot on this. Another thing is that broker's logo will be down here. Register through the links in my YouTube links and stay alert as an armed soldier. So one of the most important thing is the broker. When it comes to CFD, you must now have an access to broker so that you can see now that's where we will see the assets, the asset listing. We will see the real-time price, how they fluctuate. You will see that. You need to see an account where you could even deposit your money. You need trading tools. That's where you will see the opening buttons and closing buttons, how to set stop losses. So first thing, we need a broker, so that now the broker will give us the access to those systems, as I will teach you practically. So you need to see those, but before we see those, we need a broker. So that's why I have listed these two brokers of mine, IC Market and FP Market, and we will dive deeper into them and see a lot of things that they offer to us. And there's some mathematical formulas which we'll learn about them on how to interact with the CFD systems, because that's the most important. Now at this point, my friend, you can tell when it comes to when you understand in terms of investing how safer it is, and you understand how CFD is risky. Now when you put your money on the line, you won't be angry at anything that happens, or any outcome in the market. You'll be at a good heart because you understand you are in a very very risky situation, which is CFD. So when you go to investing, you know I'm in a safer world. So the the two words when you understand them, you'll be at a good heart at any outcome from the market. So these are the logos. We have the IC market, and we have the the FP market, and you can see some little word from the dashboard. We have low spread, that is zero pip, and some another another information here which is not visible, but we will dive into each and every broker and see all this information. You can see a lot of things here: the trade forex, gold, oil, share, CFD. You see we have zero pips, something like that. So this is not visible enough, but we will see it later. So the next page, you can see now, this is the definition of contract for difference. This is the opening point and this is the closing point. So from this point to this, that is the distance. So this is what will be calculated, and it will be multiplied by the volume you used. How much did you buy? How much did you sell? From this point to this point. That's the logic of CFD trading. So my friend, stay tuned as we go and dive deeper into now the history, the starting point of CFD trading. Thank you very much, and consider subscribing and liking.